catch up, okay? And let's just take a look at chapter 4, okay? And we're just going to go through each one of these questions and see what we get here. So as I mentioned, I was going to go ahead and ask for some help on some of these. So who wants to walk through this first one? You want to try this one? Okay. So what were we looking? What's your name? Brenna. Okay, Brenna. What were we looking for? Net sales. Okay, good. So, and I got you a little help up here, but go ahead and you can talk us through what you think we did here.
You're going to do sales revenue minus sales returns and allowances minus sales discounts.
Right. So we picked up the sales was 560,000, and then we had these debits over here where we did what? Where we picked up the returns, and we picked up the what was the 7,000 was the discount? Is that what it was? No. Is that what it was? Discount was 7,000, and when you picked those up, you got net sales of 538,000. Okay, here it was, sales discount, right? Okay, good. Good job. So once we got that answer, which was what? C here. Then we went ahead and we wanted to get the net sales. You want to try that one too, Brenda, since that first one was so easy, or you want to give someone else a chance? Yeah. Good. We got the net sales minus the cost of goods sold gave us our, and we could call it gross profit. We could call it gross margin, right? Both of those were synonymous terms, okay? And again, this was all rolling right off of that example that we went through, that in-class example. Okay, good. Good work. All right, let's go ahead then and let's take a look at this next one. Number 3 wants operating expenses, and when we go through our operating expenses, those are that are normal course of business. Okay, and if you were looking at the file and wondering what these zeros were, those are actually O's, aren't they, for operating expenses? Okay, so what do we got? Is freight out an operating expense? Freight out is an operating expense. Who pays the freight out? Buyer or seller? Does not depend. If we call it freight out, that means that tells you who pays it. Huh? If it's called freight out, that means the seller pays it to move that freight, right? Now, what you're probably thinking when you're saying depends, freight in is what? Is going to be paid by the purchaser. It's still the freight cost, but who pays it determines whether we call it freight out or freight in. If it's the seller, it's freight out. If it's what? The buyer, it is freight in, right? Okay, good. All right. What else here? Advertising expense is an operating expense? Yes? Okay. Advertising expense. How about interest? Interest is not an operating expense unless you are a bank, and then you're doing sort of your day-to-day operations. Remember, our operating expenses are the day-to-day operations, right? Okay. Okay, good. Salaries and wage expense is a operating expense, right? Utilities, operating. Depreciation is operating. How about this interest revenue? Interest revenue, interest expense, not operating, not our day-to-day operations unless we're some sort of, and I keep saying a bank, financial institution, investment house, whatever, then yeah, those would be day-to-day operations type things. So you add all these up and you get this 117,000 for our total operating expenses. And then we say, well, what's the operating income? So notice we're sort of building a multiple step income statement here, whether you realized it's sales minus sales returns minus the discounts give us net sales. We take our net sales less our cost of goods sold gives us our gross profit. And then what? Gross profit minus our operating expenses, what we just calculated to be 117,000, didn't we? Gives us our operating income of 98,000. Right? Okay. Okay, good. How about if I asked you what's the non-operating income? or I should say not the non-operating income, but what's my net income? Can anyone hang with net income? How about my net sales? Is that part of my net income? Net sales, right? I'll start there. 538,000 less my cost of goods sold, which was what, 323. That gives me what? There's my gross profit. I'm sort of repeating myself here. Gross profit, good. Of 215,000. With me so far? Okay, then what? Operating expenses, it's right there. I'm just writing the same thing again. Operating expenses of 117,000 gives me operating income of 98,000. If you're having deja vu, you're not seeing double. I'm writing up here the same thing again, but now I want to see how I can get my net income. How about net income? Huh? What? Okay, what's the non-operating? Good. We want to pick up the interest expense here. Interest expense was what? 18, and I have also interest revenue, don't I? Of 27,000. Okay, so if I sit there and I take my operating income plus my non-operating items, and what I have? Revenue? Interest revenue? What was it, 27,000? And then I had what? Interest expense. How much was that? 18,000. Okay, good. So 98,000 plus 27 minus the 18,000 interest expense gives me what for net income? 100 and what? 107,000. Okay, good. Okay. All right, good. So when we want net income, we include our non-operating items, right? Operating income is going to be my sales minus my discounts minus my return, give me my net sales minus my cost of goods sold, gives me my gross profit slash margin minus my operating expenses, gives me operating income minus my non-operating items, which are revenues, interest revenue, interest expense, gains and losses on sale of equipment. All these would be non-operating items, give me my net income. Okay, good. Okay, who wants to do number 5? Number 5. Okay, you want to try it? Okay, so they purchased switches with an invoice price of $4,000, right? So I went ahead and I debited the inventory, credit the account payable gross, and just posted those up, right? Okay. Then they say half the switches were labeled incorrectly and were returned. So can you see here this debit to account payable, credit to inventory, right? For those half that were returned. So I'm left with what? 2,000 that I still owe on this whole deal, right? Okay, you want to walk me through the rest of what I did after that? Yeah, they paid within the discount period, which was 210 net 30, which means I got to pay the whole amount in 30 days, right? Okay, good. So that's 2% of 2,000 is $40 discount. Okay, not bad, right? Get to save $40 on that. Okay, so what did I do there? I went ahead and paid the guy what, 1960? 2,000 minus 40 is 1960, so I credited the cash for 1960. What about this credit to inventory? Is that right? Because I'm paying less for that, right? So when I credit the inventory, it comes down to 1960, right? Okay, and then what? Debit the account payable for the whole amount? For the full 2,000? Right? Is the guy going to ask me for any more money? That's it, right? We're done. We paid him the 2,000. We paid him the 1960. He was willing to accept that because we paid him early, and the inventory is showing for the same amount that we paid for it, right? Isn't that beautiful? Okay. Okay, good. So that one wasn't too tough. Good job. Is there any other way of coming up with this 1960, by the way? After you got the 2,000? Did you have to do the 2,000 times the .04, give you the $40 discount? And then subtract it off? Huh? Could I come up with this 2,000 any other way? I mean this, excuse me, not 2,000, but the 1960. After I knew that I had originally bought it for 4, and that's trying to be a comma, and I had sent back 2,000, so I owe 2,000. Is there any other way to come up with the 1960 besides taking 2,000 times 2% minus the $40? 2,000 minus $40 leaves me 1960. Is there any other way to do it? There is. It's the way I always want to do it, but I say, oh, I can't do it because nobody will understand it if I do it that way. Well, 98% is almost 100%, isn't it? I mean, 2% is what? I gave up the answer. 100% minus 2% equals what? 98%, doesn't it? So shouldn't I be able to take that 2,000 and multiply it by 0.98 and come up with the 1960 that way? Do I get the same answer? Okay. Okay, so you want to start thinking that way. The more analysis you do in your business degree, the more you go along, the more people are just going to start to assume you're kind of seeing those things instantly, right? And start shorthanding analysis on you, and all of a sudden you're sitting there going, well, what did they do? How is that 98%? So you want to start to get used to that, right? Okay, so you could have got the 1960 that way too. Okay, good. Good job. Which of the following... Which of the following is shown on the multiple step income statement but not the single step? Remember, we just went through the multiple step that had what? Sales minus discounts minus returns gave me net sales minus my cost of goods sold gave me gross profit minus my operating expenses gave me operating income minus my non-operating items gave me net income, etc., right? That was a multiple step income statement. Anybody remember the way the single step worked? Right? We had all of the what? Sort of all the revenues and gains up in one big section, right? And then we had all the minuses, which were my expenses and losses, in one big section. And then we just came up with net income, right? And we didn't stop at our gross profit. We didn't stop at our operating income and then take the non-operating items out separately, right? So single step is not going to show me what? In this example, it's not going to show me gross profit. They'll still have my sales up in the plus up in the revenue section and gain section. Net income is sort of what comes down at the end. And then what? Cost of goods sold would be down in the subtract section, wouldn't it? But no stop off between netting out between sales and cost of goods sold for our gross profit calculation. If you are like, when did John start speaking Spanish? I don't understand a word he's saying. Okay, go back, Look at the slides from chapter 4. We went through the multiple step versus the single step. There's a video on that if you were not able to join us for that. You can go back and watch that video and we go through that whole thing. Okay? All right, good. How about income from operations? Should we pick up revenue? Get our income from operations, right? Minus our cost of goods sold gives us gross profit slash margin. I like to call it gross profit, but I do see some textbooks and stuff that still want to call it gross margin, whatever. Gross profit slash margin minus my operating expenses give me my operating income, doesn't it? Which was the answer to this question. And then I decided to go ahead and keep going just for kicks, and I put in a category here for our non-operating items, which included loss on equipment sale of $2,000. Okay, so I could very well give you the same exact question on your midterm, and I'll just ask you, okay, what's the net income, right? Or I'll have one where I ask you the net income. I could turn around and ask you what's the operating income, giving you the same set of facts, right? Okay, so again, your study process here in heading into that second midterm is the same as it was for the first, studying these practice midterms, studying the slides, and then sort of playing jazz with some of the questions to see if I change them up on you, right? Question?
Just to confirm,
Mm-hmm.
this question is the same type of question as number 4, right? Gross profit minus operating expense equals the operating income?
Yeah, I think we had two of asking you operating income, and both times I played jazz with them and kept going, right? You know why they say playing jazz. What I mean by playing jazz with them? You know why I say that? Huh? Well, like for example, you've heard Mary Had a Little Lamb, right? Mary had a little lamb, but when you play jazz with it, they go do 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 do, and you're going, is that Mary Had a Little Lamb? Do do do. Oh yeah, that's it, right? So I play jazz. I'm taking the same question, but I start just kind of jazzing it up, messing around with it. That's what I mean by playing jazz. Okay. All right. So anyway, okay, number 8. That's all the music lessons you're going to get in this class. Don't ask me a question about jazz because I don't know. Okay. That says non-operating. I just started bringing in the non-operating items. Loss on equipment sale. Loss on equipment sale. Is selling equipment a piece of normal operations? It is? No, that's unusual for us to sell equipment. Not unusual, but it's not considered day to day, and so we call it non-operating. Okay. Question? Okay, good. Number 8. Conrad Company reported the following balances at June 30th, 2013, and we want now net sales, don't we? Okay, so now this is getting downright boring, isn't it? So we take what? You're saying now it's boring? Okay. So you take what? Sales minus my what? Sales returns minus my discounts. Give me my net sales, right? And then the next question continues to leverage off the same facts and says, okay, what's the gross profit? So I just had to take the cost of goods sold off the gross profit, right? Okay. The gross profit margin ratio, gross profit slash margin ratio, could call it gross profit ratio, could call it gross margin ratio. $5,200 gross profit divided by the net sales, right? Question? Yeah, I took the gross profit, which was right here, right, which we calculated in the previous problem, and I just divided it by the net sales that we had calculated in the problem before that. That, by definition, is gross profit slash margin. Again, those are synonymous terms. Gross profit and gross margin are synonymous. Ratio. Yes, sir. Number 9, yeah. Number 8, you mean, or number 9? Right there. So I've got what? I've got my sales. minus my returns minus my discounts gives me net sales. Net sales, so by definition, gross profit minus our, gross sales minus my what? Minus my discounts minus my returns gives me net sales. Net sales, by definition, minus my cost of goods sold gives me what, everybody? Gross profit. Good. Then what? Then I go ahead and I take off my gross profit off of my, my cost of goods sold off of my net sales gives me gross profit. And then gross profit minus operating expenses is going to be operating income, right? Okay. Can you show me this little security blanket you have here? Okay. So what's your name again, sir? Trevor. Trevor's sitting here with his security blanket. He keeps looking at this going, okay, right? Okay, because this thing does it all right there. Sorry, I didn't mean to put my nose on your thing. But this thing does it all right here. The whole thing really is there. And then there's just a couple of extra things that we played jazz with, that we added on to that, right? I'll stop saying that. Okay. Okay, good. Did we say this already? We did number 11? Sales revenue less cost of goods sold is called, oh, God. Okay, I got it. Right? Okay, so what is the net cost of goods sold? That's a weird question. Remind me not to put this one on here. I don't like that, the net cost of goods sold. Glen Company purchased merchandise. I don't like that. I'm not going to put that ever again on any kind of exam. That's bull right there. Net cost of goods sold. That's not a good way to ask that. Sometimes, the people that write these questions, they're frustrated with themselves because they're stuck writing a bunch of questions. And they, well, I'm going to write this and make this up and call it net cost of goods sold. And that's stupid. Net cost of goods sold. They should just say, what is the net cost of the items purchased? Because they don't really make it clear to us that they sold all this stuff. And there's no obligation that you sell your inventory necessarily. Maybe you would keep it in inventory. So they should have said, what is the net cost of the items purchased or something. But I don't like this net cost of goods sold because they're purchasing it merchandise for inventory, aren't they? If they want to ask what's the net cost of the inventory, that's okay. But the net cost of goods sold is a little tricky. But bottom line is what? It's net of the discount is what we're trying to get to here. Okay. So if they want to say what's the net cost of the inventory that Glenn purchased, I'm cool with that because I would expect you to know that you hold your inventory net of any discounts that you took, right? What you actually paid for it. But what if they didn't sell this inventory? It's not clear that they sold it from the wording of this problem. Then it'd still be an inventory, wouldn't it, on the balance sheet? Okay. But the net cost is net of the discount. Yes, sir.
I was going to ask regarding the 210 and 30
Mm-hmm.
is that just assuming that we did pay within 10 days because the invoice price of 7,000?
It says that they paid within the discount period.
Oh, okay.
Okay, so it really, for the problem to be a correct problem, it should call it out. Okay, so, that they paid within the discount period. Okay, but my point here is this. Look, the process. Let's just do it again. We've done it a couple times. Debit inventory for what? $7,000 when we first buy that stuff?
Yeah.
Credit the accounts payable for what? $7,000. The guy says, hey, I'll give you 210 net 30. Remember, the guy says, oh, if you'd like to pay me today, I'll take a discount for it. Isn't that the alien on Men in Black? I believe it was a cat that was by here. Okay, so whatever. We're sitting here and what? We're going to go ahead and we're going to pay the discount, right? Okay? We're going to take it within the discount period. So if that's the case, what are we going to do? We're going to go ahead and we're going to credit cash net of the discount for 6860. right? Because we're paying them cash net of the discount. We're going to debit the account payable for the full 7,000 because he says he'll just take 7,000. Okay, and then what? Then I'm going to credit the inventory, right? Because I'm paying less for that inventory, and I'm going to credit it for the discount, which is 140 in this example, in this problem. 140, right? Okay, and so if you were to tee up the inventory, if you were to tee up the inventory, we debited it for 7, and we just credited it for 140. So the balance in the inventory account is 6860, which is what they paid for, right? But then this problem takes a huge leap and sits there and says, okay, and they sold all that. So they would have debited cost of goods sold for what? 6860 and credited the inventory when they sold that. But that's a huge leap that makes that question a bit confusing for, someone who's still trying to figure out that, 2% is the same as 98. 1 minus 2% is the same as 98%.
I'm not seeing it saying cost of goods sold. It just says cost of the goods.
Oh. Yeah, that's true. Yeah. Well, that's because you're not creative like I am. See, I'm so creative, I put words into these problems. You're right. So I guess it is okay. Net cost of goods. I thought it was saying sold. That's what was bothering me. But yeah, okay, the cost of the goods is. That's right. Yeah. Okay, good. Good observation. You're so good. Why don't you work this one, number 13? Okay, let's work this one. I'll help you. Don't worry. See how easy it is? Look at all that. Gave you everything you need to know here. Okay? So what happens? They purchase goods for what? 20,000, right? So I debit the inventory, I credit the accounts payable for 20,000. And I noticed, guys, I went ahead and I kind of co-opted the space down here and just sort of put the T accounts right here. Okay, so I'm going to go ahead and I debited inventory for 20 and I got a balance of 20,000 in there, right? Just keeping track as I go along. And then the problem says that they returned 400 for credit. So apparently they didn't like some of the stuff that they got. So we do what? We debit the account payable for 400 because we're not going to pay them for those. But of course we got to send them the stuff back, right? So now we're what? 19,600 sitting in the inventory, are we? With me so far? Okay. Then it says that they paid freight of 100. So when we pay freight, we do what? We credit the cash to pay the delivery guy, whoever it is, delivery person, whoever that is, credit the cash, and we debit the inventory for $100. Remember, any cost that we pay to get an asset to where we can begin to use it in our business is part of the cost of that asset, isn't it? And we don't expect people to go to the warehouse of our purchase of our seller to buy our inventory. We want them to come to our store, don't we? And so that's part of the cost of that inventory. So we debit inventory, we credit the cash for the $100. So right now our inventory is up to what? Up to 19,700, right? Right, 19,700. The 19,600 plus the 700 plus the $100 is making 19,700, right? Okay, good. Then the problem tells us that they paid within the discount period. So I'm sitting there and I say, okay, 19,600 times 0.02 is a $392 discount on this stuff, isn't it? So I'm going to go ahead and pay the guy 19,600 minus the discount of 392 means I'm going to pay the guy 19,208. So when I go ahead and I make my journal entry for that, I of course debit the account payable for the full 19,600 because you say, I'll take 19,600, no problem if you pay me now, right? I mean, if I'll take 19,208, you should say, if you pay me now. So I debit it for the full 19,006. That was original 20 minus the 400, so I'm paying him now whatever I owed him, right? paying that off, and he accepts 19,208, so I credit the cash for that, and I credit the inventory for the 392 because I'm getting a discount on that inventory, right? So I have to reduce the inventory for the amount that I'm discounting. That gives me then the total cost of the inventory is 19,308. Right? It's what? It's 19,000. It's 20,000. Let's just do the whole thing now. 20,000. Let's just analyze the inventory. 20,000 minus what? Minus the, how much did they send back? 400? That gave us what? 19,600 minus the 392 discount. Minus the 392 discount would have given us 1906. 19208, I should say. 19208. But I got to add what? Got to add the freight, don't I? So you could have looked at it like that. And if you really wanted to be fast on this question, you know what you're doing. And I don't recommend, by the way, guys, trying to be fast. There is absolutely nothing that is done to you by coming in and turning in the exam after, 10 minutes and doing like, the swag, as you hand the thing in and that. Meanwhile, you got like a 70 on it, okay, so there's no need to hurry. But, you should get used to understanding that if you take 19,600 times what percent? 0.98, you're going to get that 30208, I mean? You get the 19208, and then you simply do what? For the inventory? Add the freight, that'd give you the 19308. Right? Is there a question here, guys? The cost, when we pay the freight, that cost adds to the inventory. Any cost that you pay to get an asset to where you can use it productively in your business is part of the cost of that asset. If it was equipment, we do the same thing. If we had to pay the freight on the equipment, we add that to the cost of the equipment. Any cost that you have to pay to get to an asset to where you can use it in your business is part of the cost of that asset. Inventory is an asset, so we do that.
So that's a computer about
Yeah. Let me say it again. Any cost that you pay to get an asset to where you can use it in your business is part of the cost of that asset. I don't care what it is. If it's inventory, I add it to the inventory. If it was a piece of equipment, I add it to the equipment. Let's say it was a piece of land, and I have to pay title insurance. You guys know what title insurance is? When you buy real estate, okay, they're going to do a title search to make sure that there's no lien against that property, etc., and you're going to pay that to make sure that you're taking that property free and clear of any encumbrances against the ownership, right? What's a lien? Maybe I should explain that too. Let's say I loaned you the money to get a piece of land, and then you walked on the piece of land and didn't pay me. I may put a lien on that land so that I get paid before anybody else does. A new buyer comes in, they may not know about all that, so they want to make sure that there's no encumbrances to the ownership, so they'll have someone come and do title insurance to make sure that they were taking the property free and clear. Anyway, land, you don't have that. If you don't have it free and clear, you're going to have to pay the taxes on that, right? Okay. Computer. When you bought that computer, did you pay any tax on it?
Yeah.
What kind of tax did you pay? Why are you looking at her? Did she buy it for you? What tax did you pay on that? Okay. Sales tax. What else? You had to pay that disposal fee, tax, whatever it is, right? All that kind of stuff. Will they let you out of the store without paying those taxes? So if you were trying to capitalize the cost of that computer in your business, you'd have to include the sales tax, the tax that you pay to take it free and clear. If you had to pay insurance to get it there and freight, any cost that you pay to take a piece of property free and clear of title is part of the cost of that asset, including these delivery costs on this inventory. Okay? Okay, good. Let's go ahead and let's take a look at Ray Company. Okay, so Ray Company made a purchase of merchandise on credit for the terms 210 net 30 on August 10th. The only thing that made this question hard is you had to figure out if what? If between August 3rd and August 10th was 10 days. Is it? It's about 7 days, whatever, right? Okay. And so what happens? We paid within the discount period, and so we take this net of the discount, we debit the account payable for the full 7, credit the inventory for 140, and credit the cash for the net of the discount amount, right? Where's the cash? You start getting, if you start getting itchy, if the journal entry doesn't balance, you should probably become an accountant, right? You start sitting there going, wait a minute, how come there's no credit? Where's the credit? That's the sign of an accountant. Okay. Okay, good. How about this one here? Company has cash sales of $4,500 for merchandise costing $2,700. The entry to record the day's cash sale will include, and notice, guys, I went ahead, whoa, what's that going on here? Oh, it's a cash sale. Hello. Read the question carefully, John. Since it's a cash sale, we wouldn't debit accounts receivable. We debit what? Cash. Hello. It's a cash sale, right? I don't know why I debit account receivable. It's a cash sale, so we debit cash, $4,500, we credit the sales, right? And then, of course, we have to record the cost of goods sold, so we'll debit the cost of goods sold, we'll credit inventory for $2,700. Gross profit on this sale? What's the gross profit? Who wants to set it up for me? You don't have to do it in your, just set it up. Gross profit. Sales of what? How could you forget that? We did it 52 times. Sales 4,500 minus what? Minus cost of goods sold is what? 2,700. So my gross profit is 2,200. 1,800. Now, what you should be figuring out, hanging out with me long enough, is you don't have to be good at math to be an accountant, right? You see how horrible I am at math? I can't do one thing in my head. Nothing. Okay, guys? Questions on that? Okay, good. So what I want to do is two things. I guess I'll save that. No questions on that? Okay, I'm going to save that. What time do we get out? Get about a half hour. If I hand these out to you, can I trust you to please bring it next time? Okay. Bring it next time because we'll probably actually go through this next time. And it's one of those things that I put up on the screen and then it's too hard for you to see. Here it is. Okay, so take one of these, okay, and then pass them that way, please. Okay, and I don't know that we'll get to this today, but it's very important that you bring this next time if we don't, because this is sort of going to be like the central next exam. So what we're going to start to do now is cost flow assumptions for inventory. And we're going to go through these examples. We'll probably do them next time, and we'll probably go through the homework next time for chapter, what chapter are we on, 5 or 6? It's 5. So we'll go through the homework for chapter 5 next time together, okay? And so we're going to try to get through these slides tonight. We'll probably go through, thank you, sir. We'll probably go through that. Okay, great. Thanks, guys. Thank you. We'll go through this example next time, okay? And
by homework, quiz or
quiz.
Okay.
Quiz, yeah, the quiz. I'm calling homework quiz, homework, whatever. The quiz is there's 2 of them up there for chapter 5, so we'll probably go through both of those along with these examples next time. But this is going to be the centerpiece to our next exam, okay? There's an expectation that you come out of Business 120 with an understanding of the different cost flow assumptions for inventory. And we're going to talk about 3 of them in this class. One is called FIFO, which is first in, first out. The other is called LIFO, which is last in, first out. The other is called weighted average. Okay, and the reason I'm, sort of turning into the devil up here about coming to class, guys, is this is where I lose people. Every time, people just don't appreciate, new students to